Good morning, Steve Freed with the morning grain comments. Well, it looks like risk is back on for maybe the second day in a row. I think the number one news overnight is JP Morgan came out with a report saying that the symptoms of the Omicron is mild and that the pandemic could end soon and that global trade could be resuming, which means that as the variants change, they could be less concerning, milder symptoms, and if we all get some of these mild symptoms, we could be more safe against future viruses. The other thing that we noted is that the world food prices for the month of November went up 1 percentage point. Cereal grains went up 3%, dairy 1%, while vegetable oils dropped 0.2%. Meat was down 1%, and for the fifth straight month in a row, the hog prices are down because of less Chinese imports. Weather-wise, still dry in the U.S. South Plains. We're going to see some net drying in parts of southern Brazil and Argentina, while the rest of Brazil looks favorable. We're still seeing some showers in eastern Australia. Europe, conditions are very favorable there. And the rest of the Black Sea is also seeing mostly favorable conditions. We held the 560 area in March corn. Still seeing no deliveries. Cash basis is very strong. And I think that the market is trying to get back some of the losses that we saw recently due to all this COVID news and concern about slower demand. The soybean market is inching back into this $12.50 to $13 range. It feels more comfortable in. Brazil bean prices are still steeper than U.S. China is a small buyer of beans both here and in Brazil, but it seems like China's imports might be lower than what the USDA is saying. Our exports might be lower than what the USDA is saying, and our carryout could be higher on their December 9th data. Over in the corn, most people are looking for 100 to 200 million bushel drop in the carryout due to higher demand. This week's ethanol data was a little disappointing that production was down from last week, but continues to be up from a year ago, and stocks continue to be down from a year ago, and margins are very positive, which supports the nearby corn futures. The wheat market, especially in Europe and Russia, did not drop as much as we did here in the futures market. Chicago March wheat's back above the $8 level, while the KC market is back above the $8.30 level, and Minneapolis is holding around that key support around $10.25. World markets are concerned that Europe is shipping out too much wheat. They need to slow that down, and the Russian prices are going to trend higher. So we'll be watching pretty closely any news on the virus. We'll be watching any news out of Washington and the Fed chairman as far as tapering and interest rates, and we'll be watching money flow. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, treat people like you yourself would like to be treated.